Okay, testing. 1, 2, 3. Who's alive? Yeah. Uh-huh. Hey, buddy, do we have sound? There we go. All right. All right, good. Well, then, let's get on with it. Good morning. Welcome to Forex.Today, the YouTube community. Right? Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Cleaning my phone. We gather here today to conduct technical and fundamentals. The overriding goal of planning our trades in advance to reduce our risk, because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small. Stay humble. Focus on the long term. Never risk money you cannot afford to lose. Frank says, nice speeches from the Fed speakers yesterday. I believe that was James Bullard from St. Louis and Mester from Philadelphia. Where's Mester from? She spoke twice yesterday. And they say higher. Higher, baby, higher. Give me some high love. So anyways, hey, my name is Wayne. I'm a currency trader just like you. I like it. I like it a lot. I like actually anything money. I love money. Money's good. If you think money is evil, you A, don't have any money, or B, know rich people that are evil. But they were evil before they were rich. Money's good. You can do good things with money. You should think of money as a good thing. And so anywho, I like things that impact money. That's flows of capital around the world. That's demand for things like commodities. So to me, gold, money, oil, money, maybe even Bitcoin. Frank says more money, less problems. No, I'd say more money, more complicated problems. But at least you go to bed worried, sleeping in a nice, comfortable bed. Hey, we all have problems. My shoulders are stiff. My back is hurting. My hips hurt because I work too much. Oh, it's so sad, right, Frank? So sad. So I'll go sit in my hot tub and cry. It's so hard being a currency trader. Sit in my hot tub and cry. So anywho, whatever, but we all got problems. But the thing is, it does bring comfort. So anywho, technical and fundamental analysis, sure, we'll cover all that. Dollar pairs, yen pairs, gold, oil, Bitcoin, stock markets. Yeah. I'm sure we'll have an opportunity to go through all that, but ultimately you're the boss here and I'm a servant. I'm here to serve you. So let me know what you need from me. Wake up! Wake up! Cool. So in the description below the video, there is some links I'd like you to visit. Click on them, yo. One, go click the first, I think it's the first one, and it'll take you to my book, Strategic and Tactical Forex Trading. Leave a review, especially if you read it. Hey, some people left bad reviews and they hadn't even read it. One guy actually left a review. It's one of the early ones. He's like, I was in a bookstore and I picked it up and I thumbed through it and it sucked. So I put it back. That's back when you could leave Amazon reviews without actually purchasing. So he didn't even buy it and he said it sucked. I'm like, Mom, come on, Mom, gee whiz. So anywho, if you could leave a review, that's great. It motivates me to write a new book. Second link there is to join fxbootcamp.com, a community of like-minded traders just like you. The only thing is, people just like you were asking the same questions you have right now 20 years ago when I started. So over that period of time, those resources were created. So all you have to do now is join. And lastly, tradersway.com is an ethical foreign exchange broker that has earned my loyalty, respect, and my trust. Okay. And so I recommend them to you. That's straight up what I recommend them to you. Yeah, sure, they have fast execution speed, narrow spreads, huge swaps, whatever. But I recommend them. So check them out, tradersway.com. We'll get going here. Now, Highlander says, morning team, anyone out there willing to help me install templates? Thanks in advance. So, Highlander, I said I would check out the process. So yesterday, on a new installation of MT4, so I don't know about MT5. I don't really use MT5, so I use MT4. But I ran and installed just the basic auto installer and then the complete auto installer, rebooted MT4, and it worked perfectly. I had all my pivot points, all that. I didn't check out the indices, but I went back to the thing I was trading anyways, and I put the chart onto, I think I had it a confluence with daily biased. It worked fine. So it should work perfectly fine, Highlander. So again, when you run the installer, I mean, I guess I can kind of mini do it here, I think. I won't actually install, but I'll show you the process. Okay, here we go. I logged in. Toolkit. So the first one you run is basic toolkit, automatic installer. Install everything for me now, MT4. Downloads, and I'm sure you've gotten this far. Okay. You can show it in the folder. So it downloads it into your download folder, and there's the application. So you run it. And you get this, install for me. And then you get this. Welcome to the MT4. Okay. And then you get here. Where would you like to install it? In your download folder? Wait, You don't install your MetaTrader tools in your download folder. That's not where you install the stuff. So you go to File, Open Data Folder. That's the folder. So now you copy this link, copy, go back to your installer, and you paste that link. That's where I want to install it, in my MetaQuotes terminal folder. I go next. That folder? Yes. Okay, and now it'll install it, but I already have all that installed. And then you shut down MT4, open up MT4, and it's all there. And then I did the same thing for the complete toolkit. Worked perfectly fine. I installed like 500 files in about 2 minutes yesterday. Sitting on my laptop in the backyard, smoking cigars. So anyway, easy peasy lemon squeezy. I was happy that it worked because I'm like, oh my God. You know what? It was such a pain back in the day to reinstall all your files if you had to buy a new laptop or something. It would take me a day. Now it just takes 45 seconds. Boom. Done. Anyways. So US Diggity D strong. One of the things I forgot to do in the day trading group last night is look at the longer term. By the way, I had a good time yesterday in the swing trading group, not the day trading group. Did anybody else have a good time in the day trading group? Can I say it? Did anybody have a good time in the swing trading group last night? I enjoyed it. We tried a slightly, not a new format, but we tried something new yesterday, and I really enjoyed it. I found it, like fulfilling. Like it was good. I felt like we accomplished. We accomplished some work. It was good. Yeah. Oh yeah, you'll be watching the recording. Hey, currency traders, welcome to FXBootcamp. So again, Lucas asked a question. Do you have to use the website or can you use an app? See how this popped up for me automatically? No, you can use the app now. Okay, Lucas, isn't that cool? So now you can download the app from the App Store from Google Play, if that's easier for you on a mobile device, because I know you like to till while you pip and till. So anyways, yeah, the answer to that, Lucas, is yes. Okay, cool. So anyways, let's go to the swing trading area. Oops, I was already there. Sorry. You go to meetups, and there's the recording. And if you're not a member of the swing trading group, it won't exist. And if you're not a member of the day trading group, but you are a member of the swing trading group, I don't think you can see these day trading videos. They don't even appear. So anyways, that's the recording. Next day trading group meeting is here. Make sure you let the system know that you intend on attending, and you'll get the invitation sent to you. So if you're in the day trading group, do that. Video, you click to play. See, I think you have to let it play. Takes a couple of seconds here.
On your past performance, good or bad, is not necessarily
And then
indicative of future results.
you do the
Please
picture
stay
in
small,
picture.
stay humble, focus on the long term, never risk money you cannot afford to lose.
Cool.
And congratulations, you made it to Thursday, which means we are now here to kind of plan all of next week. And we're right in the middle of the month, and that can bring some new challenges. Many of us have
Look at
already
us.
hit our targets. And now what do we do? Well, I thought we would start to figure out where we are on the bigger picture, and then we can dive into the rest of the month kind of thing. Right now, one of the things I'm kind of curious about is the VIX. This is known as the fear index. So if VIX is high, then that's usually part of a risk-off environment. And well, right now, we've been stuck somewhere between 19 or even 18 a couple of days ago, and 21. Okay, is that risk on or risk off? Anyone want to take a guess? What do you think? First of all, do you ever look at this? Maybe that's the bigger thing, because you have to put the number into context. 19.87.
You see the little bubbles popping up as people are chatting?
Right. Jim's like every day. Anybody else? How about like anybody never?
It's cool, right?
So we got to kind of incorporate this a little bit, especially like if you're using QuantBox that's looking at economic data and says.
So anyways, lovely tell your mum. Huh? Brilliant. Quite right. So anyways, one of the things I wanted to do is look at the dollar at a longer term. And I forgot to do it yesterday, but this was something. I just want to show you that we've had several days of dollar strength after quite a bit of dollar weakness. And look at where we're finding strength. It's not that crazy. And so now, again, this is the US dollar versus everything. And you can see now it's making higher highs and higher lows. So maybe that's right. Maybe that's a new direction. Yesterday. All right, so anywho, that be that. And of course, you can use any of these indices, especially the ones on the higher time frames. Okay, shows you Kiwi is suddenly quite weak. Pound has been in a weak channel for quite some time. Okay. Interesting, huh? Interesting. So I'd like you to take some time and look at these longer term charts to get your bearings straight, right? Get your bearings. Where are we? Where are we going? Where have we been? So one of the trades we were talking about is a CAD Swissy. Will the CAD Swissy go up? Well, CAD has fallen precipitously. Okay. But has bounced at support. Oh, how interesting. That could be part of the plan for maybe buying CAD Swissy. Okay. Jim says VIX is up to almost 21 today. Okay, which should be stock market more likely to be bearish than bullish. Okay, and that's what we talked about yesterday, and that's what we have today. Lovely, tell your mom. Now, is that only the S&P 500? Well, we still have, I'd call that confusion. Now, luckily, look how gobbledygoo this chart is that I've drawn. And luckily, it came out as gobbledygoo as I expected it to. Wowzer. But nonetheless, not up. Okay. The German stock market, what did it do? It went to the top of its range. It didn't trend down like I thought it might earlier. I'll leave that there. It's still a projection. But nonetheless, notice all we did so far this week is from support to resistance, and now from resistance back to support. Okay, treading water. Okay, euro not up today. And it's certainly what happened today is it went up from the buy price to the target and then collapsed back down to the 55. And so you should be on shoulder alert. And maybe, okay. Maybe, baby. And you might argue that's even an R1, S1 play. Okay. All right, fine. It's not bearish, but it's bullish. Bullishness has run its course as far as projection. Okay. And Australia made its way to the top of the range and now to the bottom of the range. Very nice. Cool, right? What a cool thing. Right? We've added ASX as a way to trade Asia. And yeah, so it's just, since I've added it, it's just traded so beautifully. Cool beans, oh, for sure. Now, speaking about Asia, I was trading Asia last night. It was 70 degrees at 8 o'clock at night. 70 degrees Fahrenheit. That's like 20 Celsius at 8 o'clock at night. It wasn't even that warm at 4 o'clock in the afternoon. So I sat outside with my laptop, trading Asia, and one of the big headline news is, I guess you would say the Chinese equivalent to Warren Buffett, not as old, but a big, well-known investor in China. He just went missing. Yeah. The company's like, we haven't heard from him in days. He's just gone. What? Wow, huh? See, they're capitalist, but they're communist. So anyways, just disappeared. So bottom of the range, top of the range, and now you got to have it planned out for next week. I want you to think about this, by the way. No, Roderick, more like the police just picked him up and the government's got a problem with something he's invested in or done or said. But that's part of a centrally planned economy and government. You can just be taken away. That's illegal in a democracy. You can't be arrested without probable cause, right? But in other social structures, you can just be arrested. Why? The government doesn't like what you did. So that's that. You don't have those rights. Jack Ma, again, sort of now, what would you call him? The Bill Gates of China? He disappeared for over a year. Came back and he went from flamboyant to quiet. Okay. Yeah, so I'm just saying, right, Lucas, is in some places it's illegal, in other places it ain't. So you could be a billionaire laying in your $1 billion bed or sitting on your gold toilet and then suddenly be thrown in jail for a year. Okay. That's why a lot of Chinese, wealthy Chinese, they have money that's gone from mainland China to Hong Kong, from Hong Kong to Singapore, and then from Singapore to Canada. And so in Vancouver, there's an apartment building that's got beautiful views of the bay, of the water or the mountains or the city, and the building is empty. Bao fan. So the thing is, why are those buildings empty? Well, someone like Bao fan might have 10 apartments in that building. That's it. Now, why would you do that and not live in it? Well, what if you thought you're under threat? And sure, you have $1 billion in China, but you got to leave tonight, you know, right? Pack a bag and get out. And you're not going to be able to drain your money out of your bank account because Chinese currency, mainland Chinese currency, there's capital restrictions. You can't leave with it. So you're a billionaire and maybe you get on your billionaire jet and you fly to Hong Kong, but after that, you leave everything behind. Whatever's in your bag, you got. Maybe in your bag you stuff some diamonds in there and you have a couple of $1 million in diamonds because you can put a couple of $1 million in diamonds in your bag, but you can't put a couple of $1 million in your bag. So what's the other thing that you could do? Well, you get out of Hong Kong and you go here to here to here to here. And finally you get to Vancouver and you own all this real estate. And now you can sell, let's say if you had 10 apartments, you can sell 9 of them, live in the last one. And 9 apartments at $1 million each. So now you got out of China. You got some money. Now you got 9 million Canadian dollars, and you got a place to live. And you're out. Now you used to be a billionaire, and now you're only a millionaire. And then Canada takes 50% of it because they know you're screwed and you have to pay it. So anyways. All right, let's take a look at commodities. Okay, what do we have here? Bitcoin got to 25, back down to 23.5, which is our support line. And, it's been risk on. It's been risk on. So, you kind of if you're still a bull, and that's your higher high, so you definitely can be, your trade plan looks like this, most likely. Now, if we have a risk-off day, which some of the market is, some of the market so far today has been risk-off, 57% of you are risk-off. So this would not likely happen today if today is a risk-off day. So it could do one of these things and then maybe turn risk on Monday, depending, or over the weekend if you're trading Bitcoin on a proper crypto platform. What's up to here? Where in Pakistan are you from? My oh my WTI, I've been a bear on this for a couple of weeks, 3 weeks now. And that looks like, or it could be a legitimate lower high. What, Lahore maybe? Islamabad. Monday holiday. That's right. There is a holiday on Monday. Huh. I always miss that. So anyways, my oh my WTI, I've talked a lot about it, so I don't really want to talk about it again, but down makes sense to me. We're talking about powerful people in China could just go missing because the government decides they want to remove them from power. I worked with someone who lived in Pakistan, and it was the winter time, and they would just lose power for days on end, just be stuck in the freezing cold in the dark. And I asked him, like, why does this happen so frequently? And he said, oh, well, this part of Pakistan didn't vote for the current government, so they just turned the power off to punish us. I'm like, oh, my God. And in that part of the world, too, like, you take it for granted if you live in a rich country. Oh, if it's winter and your kids get sick, oh, they got the flu. Oh, whatever, oh. That's all right. Sit on the couch and watch TV and play with your phone for 3 days and then go back to school. You're fine. In a place like rural Pakistan, oh yeah, you might die. And you might also just be sick for the entire winter. You just might be sick for 3 months. But you could also just die. And there's nowhere to go and there's no help. And you're just like, oh my God. Okay, so anyways. Let's take a look. So my oh my WTI coming down. Gold, you can see, has made a slightly lower low. We're through the yearly pivot, but we're on the weekly moving average. So remember, our trade plan was 19 to 18, and then the next one is 18 to 17. And so far, so good. That basically has worked out. A risk-off day would prevent it from having a bigger rally back up today. Nat gas, crazy low. Crazy low. We can go to metals. Remember, I've added metals, so we can do we can do we can do palladium, we can do platinum, we can do silver if you want. Okay. Now, one thing I talked about was, I think it was here. It might have been the day trading group. So sometimes I mix these things up and I apologize. But recently I talked about the law of averages. Did I do it here or in the day trading group? How old am I? Old enough to put you over my knee and spank you. That's how old I am. Was it here that we talked about the law of averages? It was the day trading group. All right. So I'll just leave it at that. C. Okay. What did I miss if I had just gotten out of there? Huh? Did I miss anything good? Yeah, the law of averages. Law of averages. Yeah. Take a look at USD. Let's see. What was the trade plan? It looks like it might have been sell the rally for a new lower low. All right, very nice. What about this one? This was for the higher high. Okay, very nice. This one is okay. That seems to be, yeah. Yup. Taking a look at this one. Okay. Yup. 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 Yep. Good. Good. Kiwi. Okay. Oh, yeah. Okay. Now, these moves were planned not this week, not last week, the week before. Okay. I could even argue they were planned a month ago, but not as far as execution. And so far, they're working out, tickety-boo. Good, great, fine, good. So all I can say is you're welcome. Tell us about the law of moving averages. No, the law of averages. Cool. I'll teach you all about it. Costs you $88 to know. It's in the training course somewhere, unofficially, but I'm sure I babble it out somewhere. Cool. All right. So hey man, it's a long week. I'm done talking, I think. I haven't even spoken for an hour. I'm just, you know how much time I spend in front of my charts and how much time I talk about the things in front of me? It's amazing, right? So after a while, I'm like, I don't know what I said and didn't say. I'm thinking and talking about the markets all the time. So I forget what you know and what you don't know. That's why you're going to have to ask questions. You know what I mean? Like, I don't know what you know. Let's do exotics. I don't know what you know. I don't know what you don't know. Okay. I think it's safe I can move my stop loss to break even. What do I got now? So I'm just farting around 1,400 pips. And that sounds like a lot, but I had more yesterday. So, palladium. Yeah, so I don't know. Collecting my swap, though. Look at that. I'm just gobbling up my swap. Swap, swap, swap. I mean, that's cool, right? What is that? It's almost like 40 pips in swap. So anyway, we're just moving along, singing the same old song. It's the same trade that I've been in for, remember, I was short for 3 months. So originally, so I guess, no, I must have been short around here. And then I exited right about where this entry is. I think maybe just above this. I exited. And now I'm back in. Collecting my swap. So really, you could argue that I'm in my 4th month of this one trade. It's just I exited on the rally and re-entered on the, right? You can see what I did, right? Pa-chow. So now I'm waiting for a lower low or a break even. Meanwhile, while I wait, I can't lose money and I get paid every day. Am I going for yearly? Yeah, well, generally speaking. Okay, now this chart says we're going to hit 18 and stop. Okay, what this chart says to me, just the chart, remember the chart's dumb, but what it says is we're going to drop to 18 and go all the way back to 20. Now, if you're looking at capital flows, that isn't necessarily what is happening. I don't know why suddenly Mexican peso would get weak, but maybe the U.S. economy goes into recession, a hard recession, and whatever plans were being made for investment into Mexico get put on hold. Okay. Now, Matrix says you can't be a dollar bull and be in that trade for a year. That would make sense, although that isn't quite true, but I know what you're saying, and I agree with what you intend to mean. But Mexican peso can be stronger than the US dollar. Even if the dollar's strong, it may not be likely, but it could be true that money is flowing from the United States to Mexico, even if the dollar's strong. Again, not likely, but it's happened over the last 6 months. It's happened quite a bit, actually, when the US dollar has been a very strong currency and the peso's been stronger. Is it because Mexico is emerging? Well, there's a few things. Growth would be faster. Therefore, return on investment would be higher. We call that catch-up growth. But the second thing is they've raised interest rates to 11%, Matrix. 11. No, it wouldn't be just repatriation. There's something else going on there. And for those Americans that are trying to get a yield higher than their inflation level, or a yield higher than the yield on the 2-year treasury, they're trying to reach out into different types of investment to give them a higher yield. So how do you beat 4%? Oh, well, you can invest into a junk bond. Okay, well, there's risks associated with that. But at least the junk bond is priced in dollars, so you don't face foreign exchange risk. Or you can lend money to Mexico. Your money costs you 4%, but you lend it to Mexico for 11%. And maybe the spread, which we call the carry, which, is enough to compensate you for the foreign exchange risk. Okay. So people are making decisions. It's complicated. Okay. I know a hedge fund right now working with Brazilian Real, the BRL, the Hey. And so obviously there's risks associated with that, but there's rewards as well. It's not an easy currency to trade because there are capital restrictions. Therefore, that's why it's appropriate for a hedge fund, because there are barriers to entry. But also there's a high swap. Very cool. But there's obviously exchange risk and liquidity risk and a bunch of other things. And so that's why it's appropriate for a hedge fund. But nonetheless, there are risks and then there are rewards. And if you want something risk-free, it will also be reward-free. So, right? Richard says foreign direct investment. Yeah. Right? Part of the current account, capital account balance. We've talked about this in the past, but we have now hit a number. We're approaching the very, 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 very high levels for Euro Rand. And I ran so far away. Yeah, Matrix, that might be an easier way to trade that. But imagine the hedge fund's client has invested into Petrobras, but now need them to hedge the foreign exchange risk. So they might have $1 billion invested in the stock, but then they want to hedge that risk because it's in real. Hey. $14 stock dropped to 10. Now it's back to 12. Yeah, that's not that big of a deal. So many ads. So gross. Vail, I own some of that. I own some of that. Okay. Went from $8 to $16. Okay, I like it at 8. So we're kind of in the middle of that. So that's ridiculous, huh? Percentage-wise. Why is it so... See, it's not a... I mean, it's a low beta stock. In 5 years, the highest high has only been 16. And the lowest low, okay, 5, but that's under crisis. The average range is probably between 8 and 14 over 5 years, despite the global collapse. So you have a low beta stock and you just pick up the carry, right? You just sit on that. You're like, yeah, the stock never goes up, but I earn 8% a year. Interesting. Now, I'm in like Rio Tinto, for example, to compare it. And if you look at over 5 years, okay, 40 to 80. All right, so maybe it's not that much different. Okay, all right, so maybe it pays the same, but it's cheaper. All right, yeah, maybe I'll take a look at it. Maybe it is relatively the same. So you can see I'm picking up 9% a year being an owner of Rio Tinto. They pay me 9% a year to be an owner. And then if the stock goes up or down, fine. I own those shares. I can sell my shares whenever I want. But being an owner, they pay me 9% in cash. Okay? So that is interesting. So I'll go back. It seems to be maybe about the same beta. The low to high, but it's just, right? But they're paying you the same $7 a share. But the reason it's 65% is $7 a share on a $12 stock. Where the other one is paying $7 a share on a $55 stock, right? So, Beta, so we talk about the beta. The 5-year average is the same as what you're measuring. So probably is the S&P 500. Interesting. So that's a low beta stock, which means it moves the same as the market. Let's go back to Rio since they got beta there. Rio Tinto is even less than that. Even lower beta. That's interesting. Okay, I own BHP. We can compare those. Okay, again, as an owner of BHP, they pay me almost 10% a year for being an owner. That's cool. I mean, it's income. It really is income. It's, where's its beta? All right, still, they're all about 1, I guess. Interesting. 1 or less. There's no negative beta. So, okay. They're not crazy high beta. Its lowest low here was 32, and now it's 67. I bought it on this dip somewhere. So I probably paid $50 for it, and now it's at 67. Plus, every year, 10%. So think of it. You're like, what's the big deal, Wayne? Well, when you're too old to work, but you've spent a lifetime building a portfolio of ownership, remember, You could say you're a stock market trader, or you could just own companies. The secret to money is you need to own. Cash is trash. Poor people have cash. Rich people are always short on cash. Hey, can you lend me $20? I don't have any cash. Okay. Now, where's all the cash? Well, you bought a bunch of BHP. So imagine over a lifetime, okay, you've accumulated $2 million worth of BHP. Now, obviously, you wouldn't be diversified. But, yeah, when you retire in America, the number for most people, I think, is somewhere between 2 and 5 million you should have saved. Well, if you have 2 million, and it was in dividend stocks like this paying you 10% a year, every year you get paid $200,000, and you have to live on that. Whether the stock market goes up or down, it doesn't matter. Next year, you'll also make $200,000. And then when you die, all that stock, now your 2 million in BHP, goes to your kids or to your grandkids or to your dog, your husky chihuahua mix. Okay. Meanwhile, so what you want to live on is this. And for you young people, you want to buy stuff, in particular when the stock market is down 15, 20, 30, 40, 50%. You got to take whatever money you have, and instead of buying a TV, and listen to this, guys, instead of buying fancy wheels for your car and fancy lights for your car and fancy speakers for your car is crap. Okay? Buy some BHP mineral for 50% off and sit on it for 50 years. And compounding all that income, every year you own 10% more. In 10 years, you own twice as much stock than you initially paid for. And 10 years after that, you have 500% more. And by the time you're old, if you keep doing smart things with your money like that, you will be filthy, stinking rich. Okay? Now, XJ says, now, unless BHP cuts your dividend. Yeah. There's that risk. And then you go move it somewhere else, right? You go find dividend somewhere else. But yeah. So maybe XJ, maybe there's like an ETF that focuses on holding high yield stocks. And what they do is they rotate them in and out as that occurs. So like you own some Vail and some Glencore and some Rio, all right? And BHP and all that kind of stuff. And where did we start? Petrobras. So maybe I'll go buy some of that Petrobras. It's cheap. Now, the thing is, it's cheap, but I don't expect it to make much money. I don't expect it to go up in value. What I expect is to earn $7.59 per share per year. And if I can do it for $11, $12, if I give them $12 and in 1 year they give me $8, that smells good to me. In 2 years, I got all my money back, and now I own Petrobras for free. So how do you get filthy, stinking rich by the time you're too old to work? Well, you make investments where you have all your money back in 2 years. And maybe you get lucky. Maybe Petrobras goes to $60 a share, and you get a 500% return on investment from asset appreciation. But every 2 years, you double your money anyways. See, in 2 years, if you invested $1,000 in 2 years, you get $1,000 back. And then in 2 years, you get another 1,000. So in 4 years, right, you got 100% and then another 100%. Now, really what you should do if you're young is you take this $7.59 a share, and so you invest $1,000 and you get that, 100 shares or whatever, 80 shares, and then you get that $500 in income, and you just buy, what you do is you set it up so it automatically just buys $500 more. So now you got 50% or 65% more ownership than you had in the first year. But see, now it's compounding. So now on $1,600 worth of stock, another year goes by and you get paid now $800. And so now you buy $800 more of stock. So you have your initial 1,000, then you have 500 on top of that. Now you have 800 on top of that. Imagine that happening for 30 years. And then we run into a global crisis of commodities, and this $11 stock turns to a $30 stock. You have 1,000% more shares than you had 10 years earlier. You have no financial risk because you've been paid 1,000 times over. You put in 1,000 and now you own $10,000 worth of Petrobras. And then it triples in price. Okay? When you're already wealthy, Forex becomes a casino parlor, your fun space. I don't know anybody with serious money that thinks that way. Okay. So anyways, yeah, so as XJ says, you wouldn't be diversified that way, but what you do is in year 2, you invest your $1,000 instead of buying a car stereo or a TV. The young man takes his $1,000 a year. He's saving $80 a month is what he's saving. He doesn't make much money. But every month, he invests $80 into the stock market. He's a smart young man. Doesn't have much, but he doesn't burn the cash. So, $80 in 1 month, buys some Petrobras, right? And puts a little check mark into reinvesting the dividends. So every 3 months, it buys more. Okay, it's only $80. So the next month, he has got another $80. Decides he wants to buy BHP. Or Rio. He decides to buy Rio. Buys 1 share of Rio. Clicks the little reinvest. Only owns 1 share. But 10% a year, it'll grow. Then the next month, he wants to buy BHP. Okay. Can only get 1.5 shares. There are some firms that'll do that, 1.5 shares. Maybe you only get 1 share. Okay. Click the little reinvest little check mark you have to put into it. And every year you'll earn, right? You'll own 1/10 of more share. But anyways, it'll just keep compounding. And what you won't expect is you're a young man, you're 20 something, you save your money instead of spending it, and you buy what seems to be a pissy little amount. You're like, dude, I own 1 share and it cost you $80. What you don't understand is when you're old, too old to work, your $80 is probably worth $8,000. So that's why I'd argue, like, what do you do with your $80? And you're like, can you buy a TV with $80? No. What do you do with $80? You're like, I'm going to burn it. I'm going to go to the bar, burn it on beer. You're like, right? That night you went out and bought, how much does $80 buy you? 8 beers? You get 5 cocktails for $80? Shoot, New York City, you only get 3 cocktails for $80. Costs you $8,000. See, if you thought like that, like this $80 I'm going to put aside, and in 30 years, in 40 years, it's going to be worth $8,000. Now think of it. You're making $8,000 a month. You just won't get paid until you're too old to work. Well, you're probably thinking, well, $8,000 is more than I make now. Well, you're going to find it hard to live on $8,000 when you're old, because if you think and act that way in your 20s, you're going to be very successful. And you're like, $8,000? What am I going to do with only $8,000? Because all these companies and all these assets you've been accumulating for your whole lifetime, you will have millions and millions and millions and millions and millions. You'll just be, because you're so smart and so intelligent with the use of your cash. You're like a financial superhero that you're like, oh, I remember when I was a kid, I was buying 1 share of this stuff. Now I got $8,000 in the account. And you're like, and it's nothing to you. It's just nothing to you because you have so much, because you did that your whole entire life. $8,000 would be, just silly small amount for you. You're like, drain all those accounts, take the $100,000, and what? What are you going to do with it? Buy a Tesla and you're retired? But the thing is, you'd have all this other stuff you accumulated over the course of 30 years. You see? Oh, but you won't have very many TVs. You'll have a nice car, but you found a smart way to buy it. I remember, like a great example, BMW X7 came out about 3 years ago. I got invited to a BMW driving event where they just let you drive any car you want. They had all their cars out with keys in them, running. And you just walk over, jump in one, and you just drive out onto the freeway and around the roads, and nobody's with you, nobody's tracking you. They're just like, drive any car you want. We're not going to watch you. We're not going to track you. You can drive it at 140 miles an hour. We don't care. I actually saw someone got pulled over because they took one of the sports cars and he was going 100 something. So anyway, so I was driving this X7. They were brand new out then. And that's the big BMW. God dang it. It was nice. Okay. I tried to drive off the road. I literally tried and it wouldn't let me. So there's some AI in it and stuff like that. It was really cool. Big. I was trying to roll it. Anyways, I thought to myself, damn, this is nice. It had captain's chairs in the back seat for the kids that were heated, cooled, and massaging. I'm like, oh my God, do you think your kids would love massaging chairs in the back seat of your vehicle? So anyway, so I bring it back to the BMW guys and I'm like, dude, how much is this thing? And they're like, it's $140,000. I'm like, do you have it in pink? And they're like, nope. I'm like, oh, forget it then. Of course, I didn't actually want a pink one, but that was a good way to save face and get out of it because I'm like, 140 grand. What are you talking about? So anyways, so that same vehicle now, it's been 3 years. You can buy one with 20,000 miles on it for 85. A smarter way to buy a vehicle. And that's during COVID when the used car prices stayed high. So, you don't want to pay for the depreciation. So, once again, oh, thank you, Richard. XJ says the strategy becomes more challenging for someone in their 40s and 50s. Yeah, well, I think the biggest challenge, XJ, is that they're 45 or let's say they're 45 or 50 and they don't think that way. But now they've run up to the problem like, oh my God, I need money quick. Well, see, that's the problem. That's the type of person they are. I'm like, well, you had your whole life, right? You're like, you knew when you were 20, all you had to do was save your money, but you went out and spent it. And then when you were 30, you knew you had to save for your kid's retirement account. Do you guys know my wife is so smart and beautiful and talented, but particularly smart. When my kids were born, okay, on day one, on the first day of their life, the children opened their college savings account. On the first day of their life. Issued a birth certificate, and an hour later, they had a college savings account in their name. And about a week later, they had passports. Okay? So if I was half as smart as my wife, I'd be 10 times wealthier. So it's the same thing. Like if you're 50, you knew when you were 20 to do things like save for retirement. You knew when you were 30. You knew when you were 35 and your kids were born. Open up a college savings account. They're going to need to go to college. There's tax benefits. You could put money aside, avoid paying taxes, have it compound. Nope, didn't do that either and didn't do that. And then suddenly what happens is people are 50 and they realize if you get cancer, it's going to cost you $1 million. And you're like, shut, I don't have $1 million. Well, you're going to get sick and not get the health care you need. And then even if you do survive it, you will now have to live in a homeless shelter as a cancer survivor. And you're like, oh my God, Wayne, that's the most horrible thing I've ever heard. All right, so now what? They're like, no, I need that money. Well, but you're dealing, right? So now you have to teach that person, XJ, well, how to be, like the process of thinking or the process of changing the way they think is so difficult. So you tell somebody they're 50 and you have to look them straight in the eyes, XJ, and you say, look, you are living well beyond your means. So what you want to do is sell your house, buy something significantly smaller in a rougher, older neighborhood in a worse school zone. And you need to save more of your money. You need to sell your car. Any profit, the cash you have from your car, take 50% of that goes in your retirement account. And then sell your house. Any equity you have in that, the whole thing has to go to get yourself a house that's way cheaper. And then take whatever money you have left over, that goes in your retirement account. Oh, you go on vacation every summer? No, you don't. Not anymore. You have to put that money. You only spend $5,000 a year on vacation? You're like, it's only $5,000 a year. Shut up. Put it in the account. See, that someone will say, well, that's only $5,000 and that's my big fishing trip and I love fishing. And it's me and my buddies. Shut up. Because that compounds. That 5,000, when you're retired and you're asking for advice on how to retire with money, that 5,000 will be 20,000. You can't afford to throw 20,000 away on fishing with your buddies. You ask me how to retire with more money? No more fishing. Put it over there. And you know what inevitably happens, XJ? They don't do it. They're like, but I like my truck. I got to have a truck. I like my Ford F-150. Wherever I drive, I mean, that's my thing. This is my dream truck. I've always wanted to own a truck like this. This is part of my personality. It's part of my identity. Yes, that's your problem. I don't want to live in a bad school district, but you can't afford it to live in a good one. That's your problem. Oh, you don't make much money, but you want to live in a McMansion. That's the problem. So you're filling yourself with dopamine. You're buying all your pleasure now, and then when you're too old to work, your compensation goes away, and you got nothing to show for it. And that's the problem, right, XJ, where you're like, if you tell somebody now who doesn't get it at 20, they don't get it at 25. They don't get it at 50. So that's why in some cases it's hard to be a wealth advisor. They're like, Wayne, help me retire rich. And I'm like, okay, I'll give you 9 bullet points. They don't do it. They just don't do it. None of them. Not even 1 bullet point. Sell your truck and get something cheaper. I can't do that. Oh, well, you're going to retire poor. It's just math. Okay? So the first stock I ever bought, I must have been 20 years old. 20. And I didn't have much money. But you know what I did with it? I bought Apple. I didn't have much money. But I bought Apple. $6 a share. I think I made somewhere around 50,000% return on investment. Well, that's a good start, son. I held that thing for 25 years. So how do you make a lot of money? Well, that's a good start. So XJ, it's hard, man. All of this is hard. But it's just a game. It's just a game. Think about the rich person. He doesn't have a TV, but he spends it on art. 15 years later, 20 years later, they sell the art for 500% more than they paid for it. And you're like, art? A piece of canvas on the wall. Do you guys remember the money is an illusion speech on Wall Street, where he's talking to Bud Fox? This is Gordon Gekko. He's like, money is an illusion, Bud. And he talks about the painting. Okay. Well, it's this concept that there are 2 choices in the world, and sometimes we're not given the choices. So if I'm rubbing you the wrong way, that's not what I'm trying to do. Okay? I'm just trying to get a thought across. And I know the life is challenging, but the basics are simple, but life is challenging. Okay? But there are 2 choices. You work for your money, or your money works for you. And the wealthiest people, the ones in the nice cars and the nice clothes, that do nice things and live in nice places, they have money working for them. And you're like, well, how do you get to that point? Because it seems like they're living this amazing lifestyle. The thing is, to do it, you have to save everything. You have to save, well, actually, and I say save, and in economics, savings is equal to investment. So I say save, but if you save it in a bank account, a banker just buys bonds with it, pays you 1%, the bonds pay 4%, they get 3% free money. So they do that with everybody. They do it all day long. They make 3% because you don't know how to invest your money, so you just leave it in a bank. That's one way of doing it. But nonetheless, you could buy the bond yourself, or you could just buy the S&P 500. That's great. That's what I would do. I would save for 95% of the world. I'd just buy the S&P 500. That's it. Done. Super cheap, super diversified, and has income. Great. Done. You're done. Okay? But the thing is, you just save and save and save. It's like your money are employees. So the more employees you have, the more productive, the more work that can get done. Okay? So if your money is compounding in Rio Tinto stock and it's growing at 10% a year, well, you know, in less than 10 years, you've doubled your money. Now you have twice as much. And then in 5 years, it'll double that first amount. So you go from $1,000 in stock to $2,000 in stock to $4,000 in stock to $8,000 in stock to $16,000 in stock. You see, in about every 5 years. Now, it's every 5 years it's doubling, but it compared to your initial $1,000, it's exponential. 1,000 turns into 2, 2 turns into 4, 4 turns into 8, 8 turns into 16, and 16 turns into 32, and now you're too old to work. You're like, you gave up $1,000 in pleasure when you were 20, and you were rewarded with $35,000 from your 1,000. So imagine now, generally speaking, you're 3,500% richer. Is that right? 3,500? Yeah. Richer. 3,500% return. Now, if you thought that way, how much money would you invest if you thought you were going to make 3,500% on every dollar you give up? How many dollars do you want to give up? As much as you can. Now you're like, how can I work weekends? How can I stay lean and mean? How can I stay in a smaller house for longer? You need a new car. Do you buy it for $80,000 or do you buy one that's 5 years old for $40,000? Well, why would you do that? So you can put another $40,000 in your retirement account, because your $40,000 is going to be worth a lot. Remember, $40,000 compounded 3,500%. You're like, oh God. So imagine in that case, your car is free. You could have had a brand new $80,000 car, but instead you gave up $40,000 for a broken-in car, a depreciated car, but it's still a very nice car. And that other $40,000 has compounded. So your car is absolutely, totally free. Absolutely, totally free. Because your $40,000, okay, is $150,000 simply because you bought a 5-year-old car instead of a brand new car. And when you're retired, it's $150,000. And you bought this car. By the way, that car then depreciated to zero by the time you were old. So it's the dumbest thing you could spend your money on. So you're going to try to find ways to not put money into dumb things and put as much of it into the awesomeness. Okay? And so going back to XJ, to convince somebody that doesn't think that way, that that's how they're going to think, they're not going to do it. They're not going to do it. You could try. You could try. So that's my soapbox for the day. I gotta go, yo. It was real. Thank you for being here. Thank you for being part of the community, hanging with me every day. As Forrest Gump said, I appreciate you. So I will see you on Sunday if you're in my day trading group. Okay. I will see you Sunday if you're in my day trading group. And if you're not, I will see you Monday morning. So have a wonderful weekend. Remember to review your charts and identify your strengths and weaknesses and write down at least one bullet point, but not more than 2. Bullet points of things you are specifically going to try to improve on next week. I want you to write it down, make it explicit. I am going to work on this and this next week. 1 and 2. Otherwise, you're just going to stay the same, spinning in circles, because you're not specifically focused on improving. You're just existing. And that's not how to get better. So, peace on earth. May the pips be with you. May your profits be above average. Have a nice weekend.